Good morning, ladies and gentlemen. Welcome to the Navin Fluorine International Limited Q2 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Rasika Sawant from Orient Capital. Thank you, and over to you, ma'am.
Thank you, and welcome to the Q2 and H1 FY23 earnings conference call. Today on this call, we have Mr. Rajesh Welling, Managing Director of NAVINFLUOR International Limited, along with senior management team. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions, and expectations as of today. Actual results may differ materially. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. A detailed safe harbor statement is given on page number 2 of investor presentation of the company, which has been uploaded on the stock exchange and company's website as well. With this, I now hand over call to Mr. Rajesh Welling for his opening remarks. Over to you, sir.
Hello. Good morning and a warm welcome to all the participants. On this call today, I am joined by Mr. Partharoy Chaudhary and our investor relations partner, Orient Capital. Partha joined Navin Fluorine as the CEO of our high performance products business. He has also been assisting me and the finance team in the interim as we interview candidates for the CFO position. I hope all of you got an opportunity to go through our financial results and investor presentation, which have been uploaded on the stock exchange as well as the company's website. Before with my comments on the business performance, I would like to brief you on a few key developments at Navin Fluorine. It gives me pleasure to inform you that the commercial production at the plant set up to manufacture and supply new hydrofluoroolefins has started post successful supply of commercial trials to the customer. The customer has validated the product specifications for the requisite batch quantities on agreed parameters. This plant had up under our wholly owned subsidiary, Navin Fluorine Advanced Science Limited in Dahej, Gujarat. Also, 2 additional new plants in Dahej are scheduled to start in Q3 FY23. Commercial production in MPP will start in phased manner, while production in the dedicated for agrochemical customer will start in the month of December. Debottlenecking project for our CGMP3 plant in Devas is well underway and is scheduled to get completed as per plan. It gives us pleasure to inform you all that the Board of Directors has declared an interim dividend of ₹5 per equity share of the face value of ₹2, each for financial year 23 at the meeting held yesterday. Now I would like to discuss operating performance of each business unit. Our specialty business continues to deliver strong performance driven by reforms and partnerships. All 3 verticals, crop science, pharma and industrial, delivered good results. We achieved record quarterly revenue in this business unit for this quarter and reported revenue growth of 46% on YoY at ₹177 crore for Q2 FY23. This business continues to see development of rich pipeline of differentiated business opportunities. As mentioned earlier, focused on commercialization of 2 new projects in H2 of FY23. Our HPP business grew by 76% in Q2 FY23 to ₹11 crore compared to the same period last year. This also includes revenue from NFSL, which comes from the newly commissioned plant at Dahej for manufacture and supply of HFO, the new HFO molecule. Our legacy business also saw strong growth through combination of growth as well as price increases. International business contributed about 46%, whereas balance 54% is from our domestic operations. Our CDMO business reported revenue of 39 crores through FY23. As I indicated earlier, our 2022, calendar year 2022 looked soft, which is also reflected in our Q2 performance. But overall, we remain quite confident of our growth CDMO business. Work on the business plan for CGMP4 is ongoing, and we expect to take this to the board towards end of the current financial year. This quarter, we successfully completed important plant audits of 2 large pharma innovators. Also, we received a relatively large purchase order of $16 million molecule for a late-stage clinical trial. Supply for this molecule is to happen over 2 quarters in calendar year 2023, and we are currently discussing with the specific dates for the delivery of this molecule. Now, I would like to share the highlights of our financial performance, following which we would be happy to respond to your queries. For H1 FY23, on a consolidated basis, the company has reported net revenue from the operations of 817 crore, against 665 crore in H1 FY23 with a growth of 23%. Operating EBITDA stood at 193 crore, that's against 1 crore in H1 FY22, up by 19%. Operating EBITDA margin stood at 23.6% as against 23% same period last year. As mentioned earlier, we commercialized new plant in Dahej in the last quarter, which impacted the overall margins. It was operational in August 2022. On the standalone basis, NAVINFLUOR can deliver margin of around 25%. The operating PBT was up 16% and stood at 159 crore for H1 23, as against rupees 137 crore last year. Operating PBT margin was at 19.4% in FY23. Profit after tax stood at rupees 132.3 crore for H1 FY23, and that margin was at about 16.2%. Now coming to the quarterly performance for Q2 FY23, company reported growth of 24% in net revenue from operation to 409 crore against 339 crore in Q2 FY22. The operating EBITDA grew by about 11% to 94 crore as against 84 crore in Q2 FY22. Margin stood at 22.4% for Q2 FY23. Operating period 17.2% at 72 crore. PAT stood at 57.8 crore for Q2 FY23 as against 63.2 crore in Q2 FY22. I think I have covered most of the basic information around the business and financial information. We now open the floor for questions for Q&A. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, for a moment while the question queue assembles. The first question is from the line of Sudarshan Padmanabhan from JM PMS. Please go ahead.
Yeah, thank you for taking my question. So my first, I have 3 questions. My first question is on the HFO, supplies to Honeywell. If I, look at the standalone minus Concall, we are looking at around 30 to 35 crores. I understand that you, earlier said that the ramp up would be slow, but if you can give some color on, how one should expect the ramp up to happen, say over the next 4 to 6 quarters. That is one. The second question is on the CDMO side. I mean, while I agree or understand that this is, a little bit lumpy in the nature, and we have a fair amount of tailwinds, that is there in terms of, interest as well as execution. is there any kind of a shipment delay that would have, resulted in non-booking anything or certain contracts in this quarter and should be basically bunched up in the third quarter? Or how should one look at, say, the next 3 to 4 quarters in terms of the build-up? And finally, on the cost side, I mean, the other cost seems to be on the higher side. Just to understand whether largely the other cost reflects the, upfront, cost on the new capacities, or is there any one-off sense? Thank you, sir.
Yeah, hi, good morning. So on HFO, we are actually seeing relatively strong demand from the market. And, if you look at this quarter, we are talking about Q2 and again going forward Q3, Q4, we believe that at least from the demand side, we should basically be running the plant to close to optimum capacity. One of the challenges that we faced last month was in availability of one of the critical raw materials for which one of our suppliers is actually a new plant, and that project had got significantly delayed. That plant was supposed to be ready by December of last year. It just got ready. So because of which we actually didn't get all the raw material that we actually needed to manufacture. So from the demand side, the demand continues to remain pretty strong. Again, from the manufacturing side, we believe that we are in a position to ramp up to almost close to full capacity. And from the quality side also, we have actually been able to get the product right the first time. We expect that by from December onwards, we should be able to get all the raw material that we require, and hence we should be able to actually ramp up the production to close to full capacity fairly quickly from end of this quarter onwards. Because of our inability to actually run the plant to the full capacity, we actually had 2 or 3 issues. One, our cost, our ability to absorb the fixed cost was impaired in this particular quarter. Second is our utility was relatively high because we had to actually operate the plant at suboptimal level. And as I mentioned to you, because this supplier was not able to actually supply the molecule as per the agreement, we actually had to go out in the spot market and buy the raw material at a significantly higher cost. Because of these 3 factors, we actually saw a significant impact on our operating margin in NFSL, which is basically for this particular molecule, which is what dragged the overall operating margin for the company down. So that is on the HFO. On the CDMO, it's primarily, again, bunching of a lot of these orders. We see no issue on the execution side. Our execution, our demand fulfillment piece continues to remain very strong. We expect that in Q3, we should be able to do around $12 million of invoicing. And Q4, as it is seen right now, we expect to be very strong. And as I had indicated earlier, our calendar year 2022 looked soft when we actually did the budgeting for this year, but calendar year 2023 onwards looked pretty strong. We continue to see the same effect, because of which our Q1 and Q2 were relatively soft. Q3 we will be back to our $10 million plus run. Q4 onwards, which is when we move into the calendar year 23, we're expecting a significant growth to this baseline number, which is also giving us confidence to continue to work on this large CGMP4 business plan, which we hope to take to the board by end of this financial year or beginning of the next financial year.
Sure, sir. Thanks a lot. That was largely from my side.
You had a question on the other costs, so I'm
sorry to interrupt, sir, your audio is breaking up.
Yeah, on the other costs, yeah.
So the other costs are higher in the current. If you see the standalone, they are not significantly up, and they are up because of the higher energy costs on account of higher coal prices, etc., and the freight continues to remain high. And there has been some mismatch in terms of timing in the booking of the CSR related expenditure. So these are the primary heads for the mismatch in the other costs. Yeah. Thank you.
Thanks a lot.
Thank you. The next question is in the line of Abhijit Akela from Kotak Securities. Please go ahead.
Yeah, good morning and thank you for taking my questions. Couple from my side. One is on the R32 project that's been announced in the investor presentation. I don't believe we had received many details about this in the past in terms of the total capex of the capacity and commissioning timeline, etc. So if you could please just put some color around this, and also on any other plans for other HFCs that you might have now.
So the announcement about R32 was actually made in the last quarter. If you see, we had announced a capex of about 80 crore. We actually didn't specify there exactly which product it was, etc., and we didn't really get any question on the capacity, etc. So we didn't, opportunity to respond to that. But since you are specifically asking this, happy to.
Mr. Radesh, sir, your audio is breaking up.
Hello, can you hear me now?
Yes, sir. I'm able to hear you, but your audio is breaking up.
Oh, okay.
So what I'll do is I'll just disconnect and reconnect you.
Okay.
Thank you. Participants, we would request you to stay connected while we reconnect the management team. Thank you. Ladies and gentlemen, thank you for patiently holding. We have the line for the management reconnected. Over to you, sir.
Yeah, hi. Are you able to hear me properly now?
Yes, sir. We are able to hear you. Please proceed.
Yeah. Okay. So first of all, I'm really sorry for this issue. The question was around R32. As I know, this is a 80 crore capex, which was announced in the last quarterly call. So what we had done was initially we actually started working on this particular piece where we convert one of our existing lines of R22 to R32. But when we did the detailed work, we realized that we can actually set up one line for R32 without impacting our existing capacity of R22. In terms of the specific capacity and the actual impact on the revenue, I'll let Partha, who's the CEO of that business, respond.
So good morning, Abhijit. So we are essentially looking at a revenue of about 7 odd crores plus minus, which we expect to ramp up in calendar 24. So as of now, that's the timeline which we are running. I think we have enough confidence that we should be able to adhere to this timeline. There will be some production and sales in calendar 23, and the full ramp up is going to be in 24.
Calendar year.
Calendar.
Yeah. Sorry, Partha sir, I just lost some number you said. You said 70 odd crore revenue, is it, from this?
No, 200 crores.
Oh, 200 crores. Okay. Yeah, sorry, some audio issue there. And the capacity, if you could please just specify.
I would not want to specify that. We are in the project stage, Abhijit. Okay. So as we progress, maybe we can discuss about this later in the coming in calls in the future.
And any other HFCs that you might have on your agenda and for the future?
Yeah, so while this is already done and the plant is going to be ready for production from April 23, we are already looking at some other opportunities as well as opportunity to further expand capacity of R32. And once we are ready, we'll take it to the board for approval and also make the requisite. But as you can see, for this particular project, from the announcement to actual production, it's even less than about 9 months. So we believe that newer projects that we are currently working on should also have similar kind of a timeline, about 1 year plus minus. So we should be able to do it fairly.
Okay, great. Thank you. I appreciate that. And just one last thing from my side, if you'll permit, just regarding the ESOP announcement that was made yesterday. This 1,55,000 ESOPs being announced to senior management. If you could, please just share some details around who all are, eligible for this to participate in this ESOP plan, and also just on the accounting side of this, will this be routed as an expense through the employee cost line, or how will this be treated in the financials? Thanks a lot.
Yeah. So the second thing first, Abhijit, it is going to follow the classical accounting methodologies which everybody else follows. It will be charged to the P&L, but I would like to remind you that this is actually not a cash, number one. Number two, it has a tax break. Number three, eventually this charge goes and resides in the net worth of the company. I am sure you are aware of this. So how the mechanism will be.
And specifically on the ESOP plan, currently this particular plan which has just been announced is primarily for 4 people, which is the managing director and the 3 CEOs.
Understood. Thanks a lot for the clarifications and all the best for the future.
Thank you.
Thank you.
Thank you. The next question is from the line of Rajesh Kothari from Alpha Accurate. Please go ahead.
Hi. Good afternoon, sir. I have 2 questions. One is basically, you said that you appointed 3 new CEOs and complete what I would say the new organization structure. May I request you to can you please share details of that? The 3 business units who are leading the 3 CEOs, the little bit brief profile, and how it's going to be structured over a period of time. That's number 1. And number 2, your capex plan over next 2 to 3 years, and how do you see the visibility from your customers?
Yeah, so as far as the restructuring is concerned, this was done some time back. So this is not a new phenomenon, and actually I had given information related to this during my last call also. What we have done is our existing businesses, we have actually now divided them into 3 business verticals. Each of them actually is headed by a CEO. So for example, high performance product, which is a combination of the erstwhile inorganic fluoride business, refrigerant gas business, and the new HPP business has all been put together into the new HPP vertical, high performance product vertical. And that is led by Mr. Partha Roy, the CEO of that business vertical. All the functions, including manufacturing, R&D, technology, etc., specifically for that function, the business reports into Partha. Similarly, CDMO business is headed by a gentleman by the name of Mr. Ravi Venkatramanan. He's got 30-odd years of experience, pharma experience. He's worked with both on the pharma side as well as on the CDMO side. Before joining NAVINFLUOR, he was the CEO of the CDMO arm of Dr. Reddy's. He was working for a company called Origin. And prior to that, he worked for many years with Dr. Reddy's, both in India as well as outside of India. And the third vertical, which is a specialty business vertical, is headed by Mr. Amrit Singh, who's been with the company now for 2.5 years. He joined in a development role and then was moved into specialty and then was elevated to become the CEO of our specialty business. He's worked in the agrochemicals business for quite a few years, and prior to that he started here with NOSIL and then worked in Europe with Unilever for a few years before moving to the agrochemical business. As far as the capex plan is concerned, you are aware of the capex plans which are currently in the pipe. And one of the reasons why we have actually now divided the entire thing into 3 business verticals is that each of the CEOs now will be responsible for developing the overall business plan for the growth and will be working on the capexes for their individual business. We are currently seeing pretty strong set of opportunities in each of these business verticals. They are all working, that is Amrit, Partha and Ravi are working on those specific set of opportunities. So for example, I talked to you about CGMP4. Similarly in specialty, there are quite a few molecules that we are working on. Also, we are working on some opportunities with respect to new MPP. Similarly, on HPP, other than this R32, which has already been announced, there are a few other opportunities that we are working on, both in NFIL as well as under NFSL. Apart from these 3 verticals, we are also seeing opportunities on in new emerging segments, which I have also indicated earlier. So those are a separate set of opportunities that we are actually working on, and as we are ready to convert those into capex plan and business plan, we'll take it to the board and make the requisite announcements. But currently, each of these business vertical and some other opportunities outside of these 3 business verticals, we are seeing strong set of opportunities.
Super, sir. Wish you all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. First question on the gross margin expansion that we saw in this quarter. If you can highlight a few reasons for that, given that you did mention that on the HFO side, the capacity for the plant was underutilized, as well as the higher spot prices for the RM that we bought.
Yeah, so if you actually look at NFSL, the NFSL performance was actually impacted both at gross margin level as well as the operating margin level for the reasons that I explained earlier. But on NFSL, our performance on the gross margin was extremely strong, which is combination of product mix within the existing BUs, the price increases that we took specifically in some of the products in HPP as well as on the specialty side. Of course, at the operating margin level, we are still at around 25%. That is primarily because some of our fixed costs, like employee cost, etc., can increase, which is primarily the investment that we are actually making in some of these growth-related opportunities that we are seeing across the business.
Sure. So would it be fair to say that once we achieve ramp up in the HFO part, which is, let's say, maybe Q3 or Q4 onwards, there could be further sort of, tailwinds to the margin expansion overall?
We believe, and which will basically get reflected in your NFSL numbers. You're absolutely right. From onwards, we should actually see significant improvement on the gross margin side.
Sure, sir. A second question on the CDMO side. You did allude towards, the invoicing, the revenue invoicing starting Q3. Just wanted to understand, any commentary from the global clients, especially the European ones, from a demand outlook perspective.
Yeah, so the overall demand continues to remain very strong. And what had happened earlier was that almost for a period of 2 years, a lot of large pharma companies were either focusing on a lot of COVID-related opportunities, or were not able to move as fast as they wanted on their trials, clinical trials, etc., because of the lockdowns, etc. And also, a lot of these newer pharma innovators were actually not able to come to our plant to audit the plant. So on each of those three, now we are actually seeing a lot of activities. We actually had 2 large pharma innovators who we have been talking to for quite some time, but we were just not able to start the business with them because they were not able to travel to our plant to actually conduct the audits. Both those audits actually got completed successfully, and we have already started seeing some queries coming in from these pharma innovators. So on each of those 3 counts, we are actually seeing positive movement.
Okay, great, sir. If I may ask, on the specialty side, pretty strong growth there. So the earlier slowdown that we were witnessing in one of the quarters, one of the segments, has that been reversed, and we are looking at a pretty broad-based growth there?
No, so on the specialty side, we have over the last few quarters seen very good growth, and that growth will continue to remain. I think what you are probably referring to is the slowdown in the sales specifically to the pharma segment, primarily because of the sales into ARV segment, which was historically an important segment for us. But what we have now managed to do, as we saw consistent slowdown in that particular uptake, we've actually successfully managed to retrofit our assets for other applications and products. So we've kind of divorced our overall business performance with the ARV performance. So despite that, we've actually shown good growth.
Sure, that's helpful and encouraging. Thank you, sir. Thanks, and all the best.
Thank you. The next question is on the line of Naushad Chaudhary from Aditya Birla AMC. Please go ahead.
Thanks for the opportunity. Just one clarification in our HFO business, sir. Can you explain your raw material pricing and procurement policy in HFO business, and same for your finished product also? And also, is there any obligation towards the suppliers of the raw material, as well as the client has any obligation in terms of lifting the volume?
So, as was indicated earlier, when you announced this particular signing of the multi-year material supply agreement, we have a clear understanding with the customer for a certain volume uptake over the life of that product. This, which also talks about a certain minimum uptake on an annualized basis. Currently, from the demand side, we actually believe that their actual uptake will be significantly more than that minimum uptake that they have guaranteed through the agreement. And what we have done is that, in line with the material supply agreement that we have with our customer, we have actually signed similar agreement for the critical raw materials with our supplier. One of the most important raw material for this is HF, which is basically manufactured by us. For other raw materials, there is a back-to-back supply agreement, which is basically reflects a lot of terms and conditions which we have with our customers.
in terms of price revision for the raw material which we are outsourcing versus the finished product also, how often we can change the price? Is there any fixed price or fixed formula which is helping us in terms of mitigating the volatility if there is in the raw material?
Yeah. So, see, if you look at HF, so see, this is an agreement that we did. We finalized the terms and conditions with our customer in 2019. As we know, it was very different in 2019 than what it is today. The basis of the agreement was the pass-through. And we had actually discussed that once a year, that is, in the month of September, we will actually finalize the formula for the following year. Because for HF, it's an annualized outlook that we get because, our raw material for HF is also locked in an annual contract. Similarly, for the other raw material, what we had seen earlier was that the price remains more or less stable across the years, not just in that particular year, but across the year. But of course, the world has now changed significantly. So now what we are actually discussing with the customer is the possibility of doing a quarterly revision or a 6-monthly revision. But the relationship that we have with the customer actually enables us to be very flexible on this particular point. And in the past, so the agreement basically talked about a fixed price for year 1, which is basically year 2022. Because of the significant increase in the raw material price, etc., we went back to the customer and talked about this increase in this, and the customer has been very, very supportive in the spirit of partnership. So what we have seen is that the customer is, pretty flexible, and we will finalize the mechanism closer to finalizing volume and the pricing for the next year, which we believe should happen in the month of November. It was supposed to happen in the month of September, but we have requested the customer that let us move the discussion to the month of November, because that is when we will have better clarity on all the raw material for the calendar year 2023.
So for now, till next November, our raw material procurement prices are open, but finished product prices are fixed and freeze till November next year, right?
No. Currently, our pricing is fixed till December of this year. For January onwards, we will actually relook at it in the month of November, because we will get a better idea on the pricing for next year. But again, within the next year, within the calendar year, this agreement is on a calendar year basis. So again, within the calendar year, if there is a significant movement in the raw material pricing down, there will be an adjustment in the pricing, product pricing. Our emphasis will be to ensure that there is a certain margin expectation that we have, and we remain consistent with that, which is a commitment we have made to the board that irrespective of the movement of the raw material, we should be able to make over the life of that project a certain margin.
All right, just one on this only. From the time we have signed this contract till now, in terms of the pricing of the final product, how much increase we would have taken, or as it remains same from the signing of contract till today, or have we taken any revision in the price?
As I mentioned to you, the pricing discussion for January onwards will actually happen in the month of November. Okay. Currently, what we have done is basically this period of supply till December. As you know, that particular quantity is relatively very low, so it's not really a significant impact. But I think the major discussion will be for the supply from January to of 2023, and we believe that the pricing will see an upward revision of, probably at about 15 to 20%. But I think we will be able to actually, and the 15 to 20% is what I'm giving you with respect to what we have done for this period. But in November we will look at what the raw material pricing is looking like for the next year, and accordingly have the discussion with our customer.
Yeah, understood. All the best, sir. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is on the line of Ranjit from IIFL Securities. Please go ahead.
Yeah. Hi, sir. Thanks for taking my question. Again, coming back on this, the new HPP.
Sorry to interrupt, Mr. Ranjit. Sir, we are not able to hear you clearly.
Yeah. Is this better?
Much better. Thank you.
Yeah. Thank you, sir, for taking my question. On ARC32, I had one question. We have said that we would also be looking at a debottlenecking this plant in the next year. So just wanted to get a sense on, because earlier when we had talked about entering into this segment, we have said that AHF, the key raw material, that would be a constraint, and we would have to set up a capacity in order to cater to these new refrigerant, HFC. This 80 odd crore.
Mr. Ranjit, we are not able to hear your question.
I will come back.
Sir, can you use the handset mode while speaking and not the speakerphone? Your audio is not sounding clear. Ladies and gentlemen, the line for the current participant has dropped off. We'll move on to the next question. That is on the line of Archit Joshi from B&K Securities. Please go ahead.
Thank you, sir, for the opportunity and very good morning. Sir, on the specialty chemicals bit, I had 2 questions. The first one is clarification. We have mentioned in the presentation that there will be 2 plants that will be commissioning in the next quarter, in the ensuing quarter. So these 2 plants in the spec chem side, are these the ones that one of them being the MPP and the 125 crore capex plant or the project that we had announced last year? Are these 2 plants, or am I missing something?
Yeah, you're absolutely right. Those are the 2 plants.
Sure, sir. Sir, something more on spec chem. We have obviously delivered a very strong growth in spec chem in the last 2 years. We are growing in healthy double digits. And we have in the past, communicated that we keep on doing some bit of debottlenecking to get an incremental headroom with respect to volume growth. Sir, where are we with respect to our capacity utilization, and how much headroom do we have for growth in maybe the next couple of years in the spec chem bit?
So I think spec chem growth, will happen in 2 manners. One is a lot of these new projects that will come up in the Dahej, so that we have already made 3 announcements. 2 of these plants will get commissioned in this quarter, and 1 will get end of next year, calendar year. So that will actually give boost to a significant growth in that business. In Surat, which is under NFIL, we continue to do debottlenecking to get additional capacity, as well as we continue to look at the product mix so that we actually move up the value curve. So that's an ongoing exercise. So I mean, if you look at what we have done in this business, 4 or 5 years back, the commentary was that we don't have much capacity headroom in Surat quality. But despite that, we've actually significantly grown the business, and which primarily happened through the debottlenecking in Surat, and that is a thing that we continue to do right now. Currently, in our MPP, we are at about, because most of the plants in Surat are NPP in nature, we have a capacity utilization of approximately about between 70 to 75%. But as I said, we continue to do debottlenecking. And there is one dedicated plant which we have for a product for industrial segment. There, again, the capacity utilization is about 70%.
Understood, sir. Thanks for the clarification. Just one bit on the financials. So we have seen a reasonable increase in our consolidated long-term and short-term debt. We have added almost 490 odd crores of debt. I just want to understand, when all the capexes are into place and we see gross block addition, how will the capital structure look like? That's it from my side. Thank you.
Yeah, so obviously it will be high, and therefore But if you really look at the consolidated numbers, the debt equity, while the full capex is done in the current tranche, the debt equity should be of the order of 0.5, 0.6, not beyond that. Yeah?
Understood, sir. Thank you. Wishing you a happy Diwali.
Thank you.
Thank you. The next question is on the line of Ranjit from IIFL Securities. Please go ahead.
Yeah, hi sir. Hope the line is better now.
Yes, it is.
Yeah. So I was just had a query on the R32 capacity that we have announced last quarter, and you have also said that we would also consider a debottlenecking of that particular capacity. We were always under the impression that Surat is running a bit tight, and to that extent, availability of HF would be a issue at the Surat plant. So now we have gone into these HFCs. So I just wanted to get a clarity whether we also be debottlenecking the HF capacity at Surat.
So, if you remember, a few quarters back, we had actually made an announcement of a small debottlenecking project for HF. We are working on that, and that should basically give us about 15 to 20% additional capacity in HF from Surat plant from next quarter onwards. Also, we are currently working on a completely separate for a large HF plant to be set up in the Dahej. We believe that this financial year we should be able to take it to the board and get an approval for that, which will give us a significantly large new capacity of HF.
That's helpful. So that should again pave way for.
Yeah, which will basically support not only our projects, but all the other projects that we currently have in the pipeline, which we haven't yet taken to the board or announced that, because a lot of projects that we currently have in the pipeline all require HF, because of which we've actually decided to, look at a fresh 32,000 metric ton new capacity in the Dahej, and before end of next current financial year, we are planning to take it to the board.
Cool, sir. That's helpful. And second bit on the other raw materials for this. So we understand MDC is also one of the key raw materials. How do you see the supply and the prices panning out in the near future and also probably over the next 2 to 3 years?
Sorry, are you specifically talking about HFO?
MDC.
Oh, you're talking about MDC for R32. Yeah, so currently, as you know, MDC has actually started going soft now because, there are a lot of new chloromethane plants are coming up, will continue to come up. While that is the case, we are also looking at separately, because as I said to you, we have actually some other ref gas opportunities, including additional capacity of R32, etc. So separately, we are also looking at a chloromethane investment. But overall, for what we have done is, the way we have actually run the scenarios for our R32, we've actually looked at, we're keeping an assumption that the current high price for MDC will continue for the next at least period of 2 to 3 years.
Thank you. And the last bit,
it will further benefit our project economics.
Yeah. And the last one would be the R32 would be largely for domestic, or we are also looking at exports? Thank you.
Ranjit, I'm Partho. It will have the similar behavior as all the other refrigerant gases. So we are not really focused on any one particular market.
Cool, sir. Thank you. Thank you very much.
Thank you. The next question is from the line of Isha Agarwal from VT Capital. Please go ahead.
Thanks for the opportunity. So,
my question, Ms. Agarwal, your audio is breaking up.
Yeah, can you hear me now?
Yeah.
So my question was regarding CRAMS. So basically, I wanted to understand, in CRAMS, what are we more focused on? Phase 1, phase 2, or phase 3, or the commercialized molecule? If you can help me with the percentage mix, it would be really helpful.
If you look at the CDMO business, the way it operates is most of the client engagements typically start at preclinical stage. Then they continue as the molecule progresses. So the possibility of our directly getting a commercial molecule or a late stage molecule are relatively slim. But as it typically starts at a preclinical or a phase 1 level, and then the relationship continues. So for example, the $16 million PO that I talked to you about, that relationship started a few years back when it was phase 1. And as the molecule grows, our business with the customers grow.
Okay, so is it possible you can help me that presently the mix of the molecules that are into? So at what levels are these molecules are into? Like if you can have some percentage.
No, so we don't actually give out the exact percentages, etc., because that's just too much of information. But typically our focus, and again, quarter on quarter or year, it could be different, but our focus is to ensure that we have a balance between the early stage and the late stage. So we typically tend to keep that portfolio at about 50-50. So 50% phase 1, phase 2, 50% let's say phase 3 and commercial. That would be ideal for us, and that is constant focus to ensure that that remains that way.
Okay. So my next question.
Sorry to interrupt, Ms. Agarwal. May we request that you return to the question queue? There are participants waiting for their turn.
Okay. Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to one per participant only. The next question is on the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, good morning. Thanks for taking my question. I got two. Apologies, more than one. One on the ramp up of CRAMS. So now we guided that it will be 12 million next quarter, and probably we were guiding 10. I think debottlenecking is helping us to increase. So is it fair to assume that next year we will do 12 into 4, 48 million, and another 16 million that the contract we have got? So will it be fair to assume that next year CRAMS can achieve that 65 million kind of a run rate?
No, it will be difficult for us to give a specific guidance on this. We typically don't do that in any of our business. But I think it's fair to assume that the overall trajectory will continue to be up.
Fair, sir. Second, on the HFC side, we talked about the 200 crores revenue from the R32. Can you help us understand, this is based on the current realization, I think so. That's how
Sorry, I'm Partha Ashwati. This is based on our view on the realization.
Sorry, I missed you, sir.
I am saying that this is based on our view on the realization, and you must also be mindful of the fact that we are saying we'll come in 20 calendar year and 24 calendar year. Yeah?
Okay. So the view is it will be better than the CMP, or will it be lower? I know it's too much of information, but just to get an idea.
Yeah, but we can't discuss the view on this forum, no?
Fine, sir. Just one last question on the annual report.
Sorry to interrupt, Mr. Jain. Sir, may you request that you return to the question?
Okay. Thank you, sir. Thank you for all the answers.
Thank you. The next question is on the line of Rohan Gupta from Edelweiss. Please go ahead.
Yeah, hi, sir. Good morning, and thanks for the opportunity. Just one question. Some clarifications and investment opportunity which you see in ref gases. it sounds that you are pretty optimistic about the future of the ref gases and the way in R32 you are investing. What kind of investment you see that this business can require for next 2 years from your side?
So there are more than one aspects to this. If we have to invest in purely the product, the investments are going to be of a certain dimension. And as some minutes back, our managing director had mentioned that we are looking at an investment of hydrofluoric acid. There is a possibility at some point down the road we can also investments, upstream investments for certain other key starting materials. So the dimension of the overall investment will undergo some change, and I think we shall come back to the community, the investing community, in a modular manner. I think that should be our view at this point in time.
Yeah, I think just to add to that, I think across the businesses, one of the things that we are always conscious about is that in any of the areas that we actually commit a large capex, we don't want to be a second fiddler. We need to be very sure that we are bringing something at either a differentiated point of view or a platform or a partnership, etc. to the table. So as you know, in HFC and some of these other things, some of the other companies have clear head start. So what we don't want to do is just blindly follow someone and just become a Me Too player where we will actually be a number 2 or a number 3 player. So yes, we will probably make smaller investments and to reap the benefit there, but we probably will make a large capex or a large portion of our overall capex, this one, to an opportunity where we believe we don't have a clearly differentiated play and hence a very clear, sustainable, profitable business proposition.
But sir, just to clarify that in ref gases...
Sorry to interrupt, Mr. Gupta.
Madam, it was just an extension of
Just a second. Yeah, please go ahead. Just let him complete the point.
Yeah, sir, I was saying that in ref gases, we already have a clear leader being there. Definitely, we may see some opportunities growing in domestic market consumption and also in export opportunities. Whether we want to be a leading player in that where the leader is already very strong in the domestic market, I don't know how the future will pan out. But the ref gas investment is basically for the two purposes. One is for our own captive purpose and one for the outright sale in the open market. So I was looking from the second perspective that how much investment you see that the company is in position to make for the outright sales in the domestic market or in export market for ref gases.
You are talking about future investments, right?
Right, absolutely right, sir.
Yeah, so future, it's going to be very, very difficult to actually, because we don't have on the capital allocation, we don't have a set framework that X amount of capital will be allocated to one business or within that one business to one particular area. We will look at, we have to look at it on a holistic basis and then, look at how much we want to actually allocate to each of those BUs, and within HPP, how much do you want to do it for, ref gas, etc. So it's very difficult for me to actually, give you a number, etc., because we don't have either we don't have a mandate from the board that X amount of capital has to be allocated to a specific opportunity, nor does the operating team actually approaches that with a certain number in mind.
Okay, sir.
So it's difficult for me to comment on that question.
Thank you, sir. Thanks a lot.
Thank you. The next question is on the line of Rajesh Joshi from Merculus Investment Managers Private Limited. Please go ahead. Mr. Joshi, your line is unmuted. Please go ahead.
Hello.
Mr. Rajesh Joshi.
Hello. Am I audible?
Sir, your audio is sounding very soft.
Yeah. Good afternoon, sir. Is this better?
Yes, sir. Much better. Please proceed.
Yeah. Just a small bookkeeping question on your annual report for FY22. There's been an increase in the balances with government authorities. So could you please shed some light on the same line item, please?
You are talking about the consolidated numbers, right?
Yes, that's correct, sir.
So this is an accumulation of the very deposits that we have to make with the government authorities for the new facility, like deposits to the Gujarat Electricity Board, this, that, and the other. And it also is an accumulation of some GST which we had spent on the capex. It is part of the working capital, so it will get utilized as we ramp up the capacity. Yeah?
All right. Thanks a lot, sir.
Thank you.
Thank you. The next question is on the line of Sabyasachi Mukherjee from Centrum PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. I have just one question on your CRAMS business. If I look at the long-term trajectory, so we have been doing this 280 crores, 290, 300 crores on the similar ballpark range of numbers since FY21, annual revenue I'm talking about. FY21, FY22, and probably FY23 also looks like we'll close in similar lines. If I go back earlier, FY18, 19, and 20, we had a range of around 180 to 200 crores. So, is this the nature of the business that probably every 3 years we see, and you talk about a good CY23. So is it the nature of the business that every 3 years we kind of get a good jump and then it kind of saturates? What is the nature of the business? And what kind of growth opportunity probably you see in the next 2-3 years?
Yeah, so so I think some of that is actually a nature of the business, but more importantly, it's also a nature of where we are, organization in that business. Because we have 3 CGMP plants, we don't have a large CGMP plant like what say in specialty, etc., which is why we are working on CGMP4. But to be very frank with you, our continual focus is to ensure that either through a base business or there are some other options that we are currently working on to ensure that it doesn't remain the way you have described, where for almost period of 2 to 3 years it remains flat, and then suddenly we see a big jump, and then again it gets like flat, etc. Directionally, our focus is to ensure that by let's say 20, and this is something that I've indicated before also, that by FY25 or by the year after, we should be able to touch $100 million revenue in CDMO. That's what we are currently looking at.
And we work with only pharma innovators?
So CDMO business is primarily pharma, not primarily, only with pharma innovators.
Okay, thank you. Thanks a lot.
No other segment and no pharma. We don't do any business with Indian pharma companies in that business.
Thank you, sir. That's all from my side.
Thank you. Ladies and gentlemen, we'll be taking the last question. That is on the line of Amar More from Alpha Accurate Advisors Private Limited. Please go ahead.
Yeah, thanks a lot for the opportunity. Ramesh sir, couple of questions. Number one, you said that this $16 million CDMO revenue, order which we got, we are likely to supply in next 2 quarters, right?
No, the current indication that the customer has given us is over 2 quarters of 23. So they have calendar year 23. So they have talked about Q2 and Q3 of calendar year 23. So we are currently in discussion with them to see, how to really spread it over let's say Q1, Q2, Q3, etc. or calendar year 23, not financial year, calendar year 23.
Okay. And secondly, when you're saying that 2 specialty projects likely to commission, so I'm assuming that one project which was like 195 crore likely to commission in Q3, that is commissioning, and second, that project of 125 crores capex, that is also commissioning in Q3, right?
Yeah. So that 125 crore, which is a dedicated facility for a single molecule, will get commissioned in this Q3. And the other, this one, which is a MPP, which is for multiple molecules. So there we've actually got different lines. So we basically got two lines. One line for certain set of molecules, other line for a separate set of molecules. So that we are actually doing it in a phased manner. The first, this one is already commissioned. We have just started the production, the trial production, etc. But that will happen in a phased.
Okay. So when you said two, basically that phase one of the 195 crore and 125 crore, the single plant, correct?
That's correct. Yes.
Okay. Perfect, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Radesh Welling for his closing comments.
Yeah, so I would like to thank everyone for joining the call. I know that some of the participants actually had multiple questions that we were not able to get to because of the limitation that we had today. And probably a lot more had questions. So what I would actually request our investor relations partner, Orient Capital, is to coordinate with all of you and proper follow-up call immediately after Diwali so that we can get to all the questions that you have or you might have. So, so I just want to ensure that you all get opportunity to ask as many questions as possible. So please, if any query that you have or for confirmation of the date, etc., you may please reach out to Orient Capital, schedule that post Diwali. So thank you very much for your time today and wish you all and your families very happy Deepavali. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of Navin Fluorine International Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.